It's time for a practice problem. I have on the screen a trial balance which has balances of accounts, debit and credit, and it runs into two pages. So there are a number of items, and there are few new items which you've not seen, new account balances which you've not seen before. Using this trial balance, we are going to prepare both the profit and loss account, trading and profit and loss account, and the balance sheet. So we're going to follow the same process. The learning objective of this practice problem is to use a large number of items and post them to both these statements at one go, and also learn some of the new items, get habituated to some of the new account balances that are here in this practice problem. So let us get started. I am going to go to the balance sheet here, and I'm going to write the names, the headings which are required. So maybe I'll take another color here, this one. So we have non-current assets and we have current assets. You have equity on the liability side. You have non-current liabilities and you have current liabilities. Standard format, current liabilities. Now we will look at the trial balance. Look at a number, take it to its respective place. Share capital 90,000. We know this goes to balance sheet on liabilities side. Share capital is 90,000. Next up you have land and building, which is an asset. So this will go to balance sheet on the asset side, 31,480. 31,480. This is land and building, non-current asset. Plant and machinery is 14,270. Again, this will go to balance sheet asset side and non-current asset, non-current assets. Plant and machinery 14,270. So 14,270. Plant and machinery. This is another non-current asset. Furniture is 1250. Again, this is an asset and a non-current asset in nature. 1250. Furniture. Carriage inward. Now the direction of the goods is inwards, which means this company is purchasing the goods from a vendor. When you are purchasing the goods from a vendor, you are paying transportation on it as well. So this is relating to purchase. This is relating to purchase of raw materials. So this is going to go to the trading account, the first section in the income statement. So this will go to profit and loss account, but this will go to the trading account within this account. So profit and loss account has two sections. The first section is trading account. Second section is profit and loss account by the same name. So carriage inward is 4370. So I'm going to write it somewhere here, carriage, because we typically start with opening stock and purchases. So carriage inwards is going to be written here. Amount is 4370. 4370. Then you have wages 21,470. Wages, again we are going to assume the wages are being paid to the factory workers, daily wages. So this will also go to trading account. So 21,470. These are wages. Salaries, we're going to assume that salaries are being paid to the sales staff. So profit and loss account, and it will go to the profit and loss account section, 4670. So somewhere here, 4670, salaries. Then you have bad debt provision. This is something new. A provision I have discussed before. Provision is when out of the reserves and surpluses, you take some amount and you regard that amount, or you fix that amount to be used in case of certain liabilities. Bad debt provision means it is possible in the future that some customers may not turn up or not pay up. They go insolvent and you're not able to recover the money. In that case, this loss will be made good using this amount. So that's the provision you are creating. Similarly, you could create provision for tax liability that could, rise up in future, unforeseen other kinds of liabilities as well. So that's how the provisions are created. Therefore, this is essentially part of the profit and to be used towards a current liability or any other liability. So this will go to balance sheet, and under the balance sheet this goes to current liabilities section, because typically the provision is supposed to be used in the near future. You expect that thing to happen. So bad debt provision 2470 is going to go to current liabilities. So provision for bad debt. Actually, under the current liabilities head, you have current liabilities and provisions, two subheads. So provision for bad debts is shown here. So 2470 is the amount. There you go. Then you have sales. Sales are 91 to 30. So sales 91 to 30. The reason I write it here is because I saw the next line, which is sale return. So I have to make the adjustment. 1760 is the sale return. So returns 1760. This has to be taken out in order for you to figure out the net sales during the year. The returns cannot be considered as sales. So this amount comes out to be 89,470. Bank charges are the money paid for an annual maintenance charges or debit card fee or something like that. So your bank auto deducts it from your bank account. Bank charges 140. We are going to consider this as an indirect expense. Bank charges 140. Then you have coal, gas and water. This is of course relating to the manufacturing of the goods. So 720 is going to go down as the direct expense. 720 coal, gas and water direct expense. And I've not written things here. Let me just quickly do that. This goes to profit and loss account. Sale return goes to profit and loss account. And coal and gas also goes to profit and loss account. Then you have rates and taxes. These are, rates and taxes are local taxes, which say municipality collects from you. There can be different categorizations, different types of taxes, depending on what kind of business, what geography, what state you are in. So simply these are administrative expenses or expenses to be paid to government establishments. So 840 goes to profit and loss account in the second section. Rates and taxes 840. So 840, and I write rates and taxes. Then you have discount, and discount is written in the credit column. So this will go to profit and loss account but will go to credit side. Why? Because this is not the discount that we are giving to our customers. This is a discount that we are receiving. It is being shown on the credit side. Credit balance means it's an income or gain. So clearly this is a gain. You paid to your vendor and the vendor allowed you some discount. So 120 is going to be a non-operating income or a gain. So discount received is 1, 2 and 0. All right. So this goes to profit and loss account. This is done. Purchase, and I see purchase return as well. So I'll accordingly be careful while writing it. 42,160 purchases. So let me write here purchase 42,160, and I have returns. So I'm going to deduct the returns amount to show the net purchases 8460. 84 and 60. The amount comes out to be 33 and 700, 33,700. Then you have the next page where you have bills receivable. Bill receivable are the bills to be received from your customers. So balance sheet, current asset. Bills receivable are 1270. Bills receivables 1270. Then you have trade expenses. Trade expenses go to profit and loss account. Since these are in general trade, we consider these as indirect expenses. They go to the second section. So 1950 is the amount. 1950 trade expenses, and sometimes people confuse it, by saying we are preparing trading account. The first section is called trading account, so trade expenses should go there, but it's necessarily a sales or administrative expense, which should be considered as an indirect expense rather. Then you have debtors 37,800. Debtors are shown under current assets 37,800. Creditors are current liabilities. Again, let me write it here. Balance sheet, current assets, balance sheet, current liabilities. So 12,170 is creditors. 12,170 creditors is done. Then you have opening stock 26,420. See, I knew that these items exist, so I left space. Again, this is a convention. You want to look at these items clearly in a specific order. So opening stock is 26,420. So this goes to profit and loss account, and this goes to trading account, the first section. Interest is 500. Again, you have a credit balance. This means this is an income. So profit and loss, and you show this as a non-operating income. Other than sale, all incomes are non-operating in nature. So 500 should be shown here as the non-operating income. So this is interest income. Fire insurance, this is debit, so you are paying this premium 490. We treat this as an indirect expense. So fire insurance premium 490. You have cash balance and you have bank balance. Both these items go to balance sheet under current assets, and fire insurance is an expense, indirect expense. So cash and balance needs to be posted 13,000 and 890. This is cash and this is bank balance. There you go. We have posted every item from this trial balance to either the profit and loss account or the balance sheet. Again, you should remember that from the trial balance, every account balance is going to go to only one place. One of the two statements, either it is going to go to balance sheet or income statement. In the balance sheet, it is either going to go to liabilities or asset. In income statement, either expenses or income. Again, within income, it could go to the first section where you show operating incomes, or it go to the other section, non-operating income. Similarly, if it is an expense, it could go to the first section as a direct expense, or to the second section as an indirect expense. Under liabilities, it could go to the equity, it could go to non-current liability, or go to current liability. Likewise, under assets, it could go to non-current assets or current assets. All right. So only one of these, sections is where every item from the trial balance is going to be posted at. All right. All we have to do now is to figure out the profits and then bring that to the balance sheet. So the total on the credit side is 89470. This is the amount earned during the year. This is the top line. So 89470, and you have to sum this up and say what is the total expenses, total cost of the goods that have been sold in order to figure out the balancing figure, which is gross profit carried down during the year. This is a balancing figure, and I of course have done the calculations here, and the gross profit comes out to be 2790. This is the balancing figure. So the top line was 89,470, and out of that you have the cost of this top line, cost of the goods which have been sold, and this cost includes the cost of stock which you already had, the cost of the stock that you purchased, and then in bringing the stock you paid transportation, you paid to workers to convert the stock into the finished goods, and coal, gas, and water. So all of that comprises the cost of the product. You deduct that from the sale, and then you have the gross profit, gross margin earned during the year. Then you bring the gross profit, gross margin brought down 2790, and suddenly it seems that you do not have sufficient income to pay off these expenses. So we are going to first total the expenses side, because clearly there is an item with 4,000 rupees. On the other hand, you have less than 4,000. So the total expenses that you have done are 8,090. However, you did not have 8,000, you did not earn 8,090 in this year. You only earned 2790 plus 120 plus 600. So you earned less than what you spent. So clearly there is a net loss. Instead of net income during the year, net profit during the year, you have a loss that you are making. You are spending more than you earned during this year. So 80 and 90, and the net loss comes out to be 4680. This is the balancing figure. You earned less and you spent more in this year. Now, do not confuse this by saying how can you spend more than what you earn. This is one financial year. You have money from previous financial years accumulated. You can pay out of that as well. So just be clear about that. When we talk about cash account, that is when we say you can't spend more cash than what you actually have. That's a different scenario entirely. So now let's take this number, net loss 4680, and transfer this to the balance sheet. So this is going to go to reserve and surplus. So 4680, and I'm going to put brackets around it, which indicates that this is a negative number. So typically what would happen is, in a business you will already have some balance in the reserve and surplus from the previous year, and then you will reduce that balance by this amount. However, this is a standalone example practice problem. Here you just show it as negative, but what would happen is, you had, let's say, 50,000 in the reserve and surpluses. So now the amount that you will show here will be 43,320, whatever the amount this comes out to be. All right, so just let me get rid of this, means nothing. All right, you have everything you need to prepare the balance sheet. All you need to do is sum this up. You have no amounts in the non-current liability side. So when I total these two sides, I'm going to do 90,000 minus 4680 plus 2470 plus 12170. So the total comes out to be 99,960, and same on both the sides. All assets are equal to all liabilities. All debits have equal credits. So in this practice problem, what we learned was a few new things. We had a loss, for example. How do we adjust for the loss made during the year? We also had a new item called provision for bad debts, and then we looked at a bunch of items which we posted to balance sheet and income statement. You also had incomes here. You had a credit balance in the discount account, which was also new. And all in all, we looked at a bigger range of transactions or the accounts, and we posted them into the final accounts to prepare the balance sheet and income statement. So I hope by now you have a firm grasp over how the balance sheet and income statement are prepared internally for the purpose of data creation. Of course, this data will be converted into more presentable format and then presented to the public, then published to the public. There are guidelines which are followed, the templates which have to be followed, the sequence which has to be followed. But internally, this is how we prepare the balance sheet and income statement. And then you'll also learn as we move forward. You'll see how these numbers are used in the analysis to converting this data into information so that decision making can be done. All of that will come up very soon in the course as well. All right, I'll see you in the next video.